Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Bharat Forge and why the stock has recovered and what you need to do in this top auto ancillary company. So let's get started. First of all, a disclaimer that this is not a stock recommendation and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Bharat Forge, a small request that kindly support me on Patreon. Once you do that, it will help me grow the channel, help you also ask me questions in greater detail. And once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts that I put up from now and then. Every couple of days, I put up a podcast on a stock or the market level. So kindly, if you become a patron, you'll get all these services. If you want detailed market or company analysis with respect to a number of companies you're holding, you can directly email me and we can work things out. Now about Bharat Forge. Established in 1961, they manufacture forging and auto components for heavy commercial vehicles and medium commercial vehicles. Have exports to North America mainly. It is a part of the Kalyani Group, so a good management pedigree behind the company. It is also in power, construction, marine, railways, oil and gas, etc. So they are not only providing services to the autos with respect to HCV and LCV, but they are also into different industrial domains. If you look at the financials, then the sales have dropped by around 35% in this Q1, and this is Q1 versus Q1 FY20. So Q1 FY21 versus Q1 FY20. From a profit of 330 crores, we have gone to a loss of 47 crores. Decent promoter and institutional holding. The return on equity is pretty strong at 20%, and operating profit margin is pretty good at 13%. If you look at the performance of the stock, then stock fell 50% from the 2018 peak till Jan of 2020. So if you go back, then from 2016 March till 2017 December, we have had a severe bull run in the small cap index, and we saw stocks double, triple, become 8, 10x, and auto ancillary also performed really well during this 1.5 year period. But then from 2018 January, we saw a fall, and for 2 years the stock fell relentlessly by 50% and then fell even more. So it fell around 60% in February and March and went into, I think, total abysmality, I think 200, 220 or something like that. Have seen a sharp recovery post the dismal Q4 numbers. Even then, the recovery has been pretty good. Valuations are still expensive as the numbers have tumbled. So in that regard, the valuations have become extremely expensive. Growth has virtually stalled on the export front, and we have seen that in Q1 that for at least 45 days there was no virtually very low sales. So the dividend payout is good, but the growth has stalled for the time being. So the reasons for the stock crash: heavy commercial vehicles under pressure in North America. So North American sales, which have started to come back just recently, has not been doing that well in the last quarter of FY20 and the first quarter of FY21. It has not been that great with shutdowns, etc. Domestic auto sales and especially domestic commercial vehicle sales have been in dire straits because of the economic condition here in India, and because of absolutely very low, you can say, investments by the government into projects. And so there is very low investments into buying more commercial vehicles, and hence the sales have dropped. The current situation is also worsening the crisis, because here in India the situation is not that great on the ground with respect to the infection, and hence construction activities are not even at the same level as it was, say, a year back. Leave alone what it was, say, 6 7 years back, when there was a real estate, you can say 8 years back, when there was some sort of a real estate movement taking place. Even the downturn of 2019, that we had some semblance of real estate activity, construction activity, even that we are not seeing. And that's why sales of commercial vehicles have dropped sharply here in India, and auto sales have also dropped, and hence a direct effect on Bharat Forge. Uh, Things are better than April, so it's not that bad that everything is gone to a stall like it was in April. It is getting better, but it is still very gloomy. It is not that everything is fine and we are going to see a good high single digit or you can say low double digit growth in this sector. It is not that. So things are becoming better, but it's very slow. So prospects of recovery look bleak for at least 2 3 quarters, and that is why the stock has got sold into quite sharply during February and March. And yes, there has been a recovery. I'll tell you the reasons for the recovery as well. So, why the recovery has taken place? There's a hope that the worst is behind us. Not that the prospects would be very great, not that everything is going to be a V shaped recovery, but there is a hope that okay, whatever worst could happen to this industry, and especially this industry and textile, etc., and many others, which have been in trouble since 2018. I think this will be a culmination of the troubles that the sectors are facing. So there's a hope that okay, things are getting better and the worst results are behind us. So let's just buy the stock and hopefully things will keep on getting better. Truck sales of North America showing positivity, and that was what I was saying, that monthly sales have risen sharply, and that has also led to heavy sort of buying in the stock, because that is the major component of their sales, total sales that come in. So Bharat Forge, with their sales in North America, uh, gets a big, you can say, chunk of the total sales that comes into the picture, and North American sales have increased across the board. Valuations were abysmally cheap in March, and that's why the buying spree continued, because probably those valuations will not be, you can say, witnessed for the next 6 to 8 years in many of the companies, and that was the reason why there was a mad cap buying into many of the quality mid and small cap stocks, many of the quality large cap stocks. Indian heavy commercial vehicle sales expected to improve. uh, Things are getting better on the ground, and it is expected that probably from FY22, start of FY22 onwards, things could get much better. So the market is looking at around 1 year ahead, and market is always forward looking, and that's why it is believed that let's get into the stock. It is one of the marquee brands in HCVs, so let's have it. Mid cap mad run is taking place. The people are going for mid and small cap companies. The flavor has come back into picture, and that has also led to the up move in the stock. Defense orders may also pick up with the kind of situation that is on the ground. Bharat Forge is also pretty big on defense and defense equipment manufacturing, and whatever is happening on the border and things that are being talked about, this company can be a play along with one or two others to that defense play as well, and that's why probably the buying. So what needs to be done? Accumulate over the next year or so. I believe not 18, but even for the next year, if you buy consistently on declines, on major declines, then you could get a very good price after 4 to 5 years. I think this can give you a decent amount of return. I won't say a multi-bagger or something, but a decent amount of return even if you accumulate. Do not invest more than 5% of your total investment, and sector may test your patience. So things could get better, but I don't know when, whether 1 year, 2 year, 4 years, I don't know when this will get better, but so it will take your test your patience. So this was my video on Bharat Forge. Please like and subscribe my channel and hit the bell icon so then you can get my videos straight away when I post it. Thanks a lot for watching.